Welcome back to this channel and welcome to this video where I'm helping you navigate the wall of information that is the stock market. We're going to work through facts and figures and different pieces of information so we can predict outcomes. Now today's video is actually based on a video that's posted yesterday by CNBC titled "Why Russia's Invasion of Ukraine Has Sent Automakers Scrambling." And the video itself talks about how the supply of different components of cars has been affected by the war in Ukraine. The video talks about things like wire harnesses, which connect all the car together electronically, the supply of palladium, and how there's been price hikes for steel, copper, aluminium and nickel. If we look at this chart here on nickel futures, we can see the price has absolutely rocketed this year because of the war. Here's a tweet from Elon Musk talking about how much he needs nickel for electric vehicles. So it's all pretty important stuff for car manufacturers, and a lot of them have been affected by what's going on. And then there's the chip shortage as well. The video goes on to talk about how some car manufacturers have actually benefited from the chip shortage as they're able to push prices through because the prices of their cars are more expensive. For example, Mercedes. And then talks about Ferrari. If you watched my previous video, 2 videos ago, I spoke about Ferrari and the value of the company and how it's going to be correlated to the Formula 1 this season, and talk about how the company is unique in its own brand. It's carved out its own market. And here in this video by CNBC, they're saying that Ferrari's been unaffected by what's happening in Russia and Ukraine. Part of the reason is because of the price of Ferraris and the demand. When people want one, they'll pay for it. And Ferrari produce roughly 8,400 Ferraris every single year. If you compare that to Mercedes, which produce 300,000, that's a lot more. So that is great news for the channel. But today we're going to go into a bit more detail about this company called TE Connectivity that I pinpointed in the last video. They are a connectivity and sensor solution company. So they make all the stuff that connects different bits and pieces together. They have locations all over the world. They're quite a big company with 32,000 employees. And the first thing to point out when you go to the about is you've got our company, executive team, then engineering leadership. So there's 2 different parts of the business. If you look at the exec team here, going through some of their profiles, I'm getting a kind of MBA feel to the company. Very seniority leadership kind of company. And then we can look at the engineering fellows here. We've got 25 patents, 50 patents. Again, I'm kind of getting that MBA feel here. If you read through the first quarter earnings published earlier this year, it's very financial, very we've done this, so we've achieved this, which shows that the language used is read like an accountant's written it. If you look at their YouTube channel here, they've got some great videos going back 5-6 years ago. Here's one talking about contactless connectivity for smart factories, how they're actually able to transfer data and information wirelessly through something that they make and manufacture. But if you go to more recent videos, the videos get a little bit repetitive. There's less effort gone into the videos. So that tells me that they have been chasing the margins for some time. Now, there's nothing wrong with that. That's how a company can become successful. But if a company does that for too long, they lose out on innovation. They lose out on curiosity, and they can lose themselves. Now, my assumption is this company has been chasing this autonomous cars, electric cars for some years now. They've actually They push this quite a lot in a lot of the stuff you read online. Now, to me, it sounds like they're leaning on this. They're saying that, well, because of the rise in electric vehicles, because of autonomous cars, our business is going to be okay. Our business is going to survive. That's something to me to stay away from. That's a company which, okay, that might happen, but it might not happen. So in this context, we're saying this company's been chasing the margins. They've been looking for shorter term profits and have been missing out on innovation, intellectual curiosity. Now this creates space for something else. Now I want to introduce you to this. It's called The Innovators Dilemma. It's a book written by this guy called Clay Christensen. And this is the chart, which is essentially the Innovators Dilemma. Now the blue line is the larger, more corporate company. That's our TE Connectivity. They've been focusing on what's known as sustaining current innovations, which is serving their current customer base and chasing the margins. Now what we're looking for now is an orange line. We're looking for a company that can disrupt what they do, which essentially will lead to greater outcomes, which will lead to increase in share prices. And at some point, the 2 lines will cross, which is when the more corporate company realizes they've actually been focusing on short-term gains, and this company's come out of nowhere and is beating them at their own game. So if we go back to the company's financials, we're looking for something to follow. We're looking for an avenue to really explore. So if we look at the segments of the company here, transportation, industrial communications, transportation solutions is the largest part of this company. If we go further down, we'll see automotive, the segment's net sales. One of the leading providers of advanced automotive connectivity solutions, raw materials, plastics, gold and copper, aluminium, brass, steel, all that kind of stuff. Now what I found here was a list of top 10 electrical components manufacturers with our company in question, TE, on the top of the list. So what we want is a company that's been disrupting what they do. So I'm looking here for electronic connector stocks. If I go through a few of these, I'll find this one company, Bell Fuse, electronic connector manufacturing company. Shares have been up 55% in the last almost 2 months. And then I find this company, Wolfspeed. Now they weren't on our list of 10, but they're on the Google search. Wolfspeed is a developer of wide bandgap semiconductors focused on silicon carbide and gallium nitrate materials. If you look on their website, they're talking here about capacity expansion. We're currently constructing the world's largest silicon carbide factory facility in Marcy, New York. Water fabrication facility, automotive qualified. If you look at their LinkedIn here, 1,200 employees. We harness the power of silicon carbide to change the world for the better. I mean, that sounds good. But is that true? Is that a fact? Is that what they're actually doing? Because that would be quite cool if it was. So the question here is, what is silicon carbide? Silicon carbide is a hard chemical compound containing silicon and carbon, a semiconductor. So this is the stuff that conducts the electricity that goes in the components of all the stuff these companies make. What is silicon carbide used for? Melting of glass, heat treatment of metals, ceramics, electronic components. That doesn't mean that much to me. Letters to shareholders. This is from Wolfspeed. We are creating a semiconductor powerhouse leading the global transition of silicon to silicon carbide. That sounds pretty awesome. Is that what they're actually doing, or have they just written that because it sounds cool? So the question becomes, what's the difference between silicon and silicon carbide? Silicon carbide can switch at nearly 10 times the rate of silicon, which results in a smaller control circuitry. Higher voltage, 10 times more efficient and higher voltage than silicon. So if we go back to our original company, TE Connectivity, these guys are talking about the journey towards autonomous cars. What I'm interested in is, do all electrical components contain silicon? Most modern day electronics contain silicon. This important semiconductor material is used to power a wide range of electronic devices, from supercomputers to microwaves. Are all electronic devices made from silicon? There are a few things that are more complex than electronic devices. Despite this, the simple element of silicon is the basis for most electronics today. So if this company is working on innovating the silicon that's used in the electronics, now they are essentially going to disrupt our TE Connectivity company. So what I found here is a disruptor, Wolfspeed, for our traditional TE Connectivity, the blue line that's been sustaining the more traditional innovations. So that to me is a company worth keeping your eye on. If they develop this technology which all electronic components use, then that company will become more valuable in the future. If we look at the share price of this company over the last 5 years, there's been a gradual increase, which to me generally means the company knows what they're doing, knows who they are, and knows where they're going. And that is the end of today's Yellow Brick Roads. As always, I'm going to keep an eye on this company, see what happens in the future, and find more connections to this company as the channel progresses. If you like this video, please like, subscribe, comment, and I'll see you in the next one.
See the wizard.